live. I think let's just kick it off with like a brief intro, and then we'll just go, and then we'll free float, whatever, and I have the structure here. So I don't have an official intro, but what I would love to talk with Tony about is, the 5 steps of launching a token, which is the traction, the private round, community round, fundraising, marketing, launch. And I think one thing I thought about later missing is kind of like what happens after that, because that's where you mostly drop off, but I would love to discuss a little bit more. And I think that's where you come in mostly as well, is like, what do you do on the marketing side to keep the people engaged and actually continue to build a community and actually adoption of your token? And I think especially if you do the tokenomics incorrectly, there's a lot of selling pressure that will continue to come on. And I think that's an important one to discuss as well. So maybe a brief intro, Tony, Mike. Yeah. Mike, do you want to kick it off first because you have some...
Sure, I'll go real brief. So I'm Mike Blutstein. My background, as Tony knows, my partner, is that I've spent the last 10 years working in Hollywood. So I was at Saturday Night Live where I started my career. And then I was an agent representing brands and influencers and content creators. And then really like got my sort of real start working for a guy named John Goldwyn, whose family created MGM, Metro Goldwyn Mayer, and he was just my sort of mentor. And so he used to run Paramount. He greenlit Forrest Gump, Titanic, Braveheart. I was his right hand. I did the show Dope Sick, which won an Emmy for Hulu, the new Dexter, Manhunt, MacGruber. And then I was running Mike Tyson and Kenan Thompson's company, sold a whole bunch of stuff. But honestly fell in love with Web3 when I found Tony's project. Like in 2020, I was like a community member and was just YOLOing money in. I didn't know what I was doing. And I was like, this thing seems cool, micropets, like a Tamagotchi. And then I would just send this guy who I knew not at all messages late at night being like, yo, man, you guys want to do a metaverse? Like, let me shoot a commercial. And within like 3 days, he's like, all right, here you go. And he transfers me like 6 figures to go make this commercial. He doesn't even know me. He doesn't know my full name. And I come back, we shot this thing, and it looked like a Pixar movie. It was awesome. And the chart doubled and tripled, and tens of thousands of NFTs sold. And I just fell in love with the speed in this space because Hollywood takes a long time. So fell in love with the fact that like people here are just down to ride and like get a little crazy and make shit. Stuff. Sorry, I don't know if you could say curse.
All
but,
good.
All right, shit. Anyway, and then so we started a company together, Tony and I, and we'll talk more about that. But it's all about really bringing the sort of like vision that it takes to sell a movie is the same vision it takes to sell any project, right? It's like, tell me what's in your head. I'll tell you a better version of how to pitch it to the world, whether it's through websites or content and creative. So that's what we do. And yeah, man, happy to be here.
Yeah, one of the things that I found really interesting when I was going through your LinkedIn post was like, how people use a lot of corporate jargon, but you actually want to like dim that down to make it understandable for people. And I think there's where a lot of people go wrong is like think they need to have some fancy words, but fancy words might scare people off and they don't understand it. Yeah. While you want to dim it down and make it super easy to understand. I don't know if you guys know Alex Hormozi. He said you need to run it through like an 8th grade reading rewriter or something to make it super simple to understand. Yeah. And that was an interesting post that you made.
It is, there's a lot of beauty in simplicity, but it's very hard to make something very complex, very simple. So that's the sort of goal I think that we all have.
Well, if you have some tips on market making, how to make it simple, we could use some help. It's a good bridge to you, Tony.
Well, first of all, thanks for having me, man. It's a pleasure to, be here live. I know we've been trying to set this up. So, 2017, I got in crypto. Like 2021, I started my own project, and I was on teams and just kind of, contributing as a community member. And I'm like, I want to start my own thing. Had an idea. We didn't know what to expect. Very much a community-oriented project, right? Different than it's kind of done today. We had over 70% of the supply was to the community inside Liquidity floating. Yeah. No big VCs, nothing like this. We launched it, didn't know what to expect. And within 3 weeks, this thing was over 200 million in market cap, over 30 million inside the Liquidity pool and the Decentralized exchange. 50,000 of these digital NFTs were sold. We had 75,000 on-chain holders on the actual, on the actual network you could track on chain, and we found ourselves like in literally in a position where we were right on the tail end of the bull market, right? And so like really what I try and do in a lot of my work is really bring like that experience to teams, because it's not only like it sounds great to this fairy tale of going up, right? But there's also going down, right? And when the bear market starts, that's what happened to us is literally like 8 weeks after we launched the project, the bear market kind of started, right? And like towards the tail end of 2021, December, early January. And so then we had to ride all those troubles down, right? And so really as a founder, it's like a lot of stuff you have to navigate. And what I learned is like it's having the right people on your team, you know. And I met him as a community member, right? But before I transferred that money, he gave me a video for my kids of one of their favorite stars, saying hello to them, things like this. So
That's awesome.
There's a level of trust, you know, even though you might not, you know, fully have met somebody or whatever, you can get a sense in who people are. And I believe like that's really one of the most important things. And that's what I try and bring in, not only the content I put online, but like how do you bring a real care about who you're helping and really help them bring their projects to market in the right way and really share what worked, what didn't work. So, you know, a lot of the stuff I'll even focus on, those who do check my content or whatever will be sharing literally $10 million in selling pressure from rewards. How do we had to change the whole economy while it was live, right? So as I come, you know, as a tokenomics guy, that's primarily my focus because it was a big pain point for me and it was hard to navigate. And so I think it's really good to help other people. And I started Convert because I believe, and I know this to be true, a confused mind will never buy, right? And Mike is a really specialist in that narrative, right? So when you're communicating what you're doing, most projects just think about marketing. Then they figure out where they're gonna spend their money, PR, KOLs, all this. But how much have you thought about what you're gonna send out? You know, is it confusing? Is it unbelievable? Or is it boring, right? When you start looking at this, some things are boring, they're confusing, like you said, jargon, you don't understand it, or is it unbelievable, where you don't even believe it to be true to begin with? You're not gonna buy it, right? And so really, that's what we seek to do, you know, at Convert is really help projects through websites, pitch decks, you know, any kind of creative content, but to tell that story. That way we can help them like really showcase their vision and what they're building. And I believe that to be really important. A lot of wasted money. I liken it to like literally printing your message on gold paper and sending it out to a whole demographic that doesn't even speak your language. Yeah, that's what you're doing here. You know, that's why I liken it to. So, but anyway, thanks for having me, man. It's awesome to be here in person.
One of the things that comes to mind while you say it is the formula I often say, you might have heard, is like adoption is fundamentals multiplied by marketing multiplied by liquidity. And we have you on the fundamentals with the tokenomics. We have you on the marketing, and then we have me as kind of like the liquidity or the market making. So we kind of have everything that should make, you know, get a token up and running and actually succeed in the long run.
Take over the world right now.
Exactly. So that's really good.
Now you got to introduce yourself.
Yeah. Good. So Jelle, I'm one of the co-founders of Enflux, and we do market making service for token projects. Doing this for over 55 at the moment, and we do some OTC investments as well. But we do more like, you know, flexible, you know, treasury building, you know, OTC deals, short lockups. But very flexible and in a way always transparent, you know, making it a win-win for both parties. Doing this I've been market making actually for over 4 years. Started as while I was still a student, made a bit of money in the last bull run or the 2021 bull run during COVID. And I was like, I cannot leave it in crypto. We'll go down at some point. You know, I cash out a bit. And I started going into bots and algorithmic trading things and got scammed a couple times because you lock the money in there, you make a minute of money back. Yeah. And it was a good lesson, but I was like, fuck, I got to understand what happens under the hood of these algorithms. So I know that if something happens, the specific, you know, bear market scenario is kind of like covered. And then I got into Hummingbot, an open source software for trading. With a lot of connectors, and I had a method to provide liquidity with limit orders on the book and get rewards. Kind of like how you put it on a liquidity pool on a DEX. This was on the centralized exchanges. Okay. So it was a way for me to use the open source algorithm, code it a bit, and actually put limit orders on the book as a market maker and get the rewards based on how much liquidity I provided on the book. So it's kind of like a mini way of being your own market maker on 20 different projects at the same time and managing it yourself.
That's awesome.
Started to work for that company because they were setting up a market making service company. Worked there for 7 months, set up kind of like the trading strategies, the infrastructure together with the team there. And then I was like, well, I want to do more. I'm more of like I want to do sales and stuff. And they didn't let me. They only let me do the trading. So I was like, well, I know how to do the trading. So let me, you know, find someone that is really good at the tech side, the infrastructure, and can handle that. And we started together. That was about 2.5 years ago. Ran it with like 2 to 4 people for about like quite a long time, like almost like a year. And that's what we scaled last year up from, you know, 4 to over 20 people right now.
Wow.
So that's what we're at. It's been a very cool journey. First time that we're having a little bit like the market is going down a little bit. So the first time Enflux sees that, we started in the bear market. We had 5-6 months of bear market time, and then the market started to rise up nicely. So it's been a cool journey.
What do you think? What is it that's been making you guys so successful to go from, you know, 4 to 20 clients?
I I think it's pretty simple. I think one of the differentiators is just being an honest, fair market maker these days.
Yeah.
There's nothing special to be fair, but that is your USP. And
that's
the things that to me at least, this to me sounds very much like normal, that you have integrity and you do the right things for the client. But apparently that's not what every market maker does. Or making the dashboards available so clients actually see what we do, which in my opinion shouldn't be a USP, but apparently it is. That is, I think, what made it successful. And then really sitting down with the client and helping them understand what the fuck we actually do and help them understand the service we provide and the value we provide. Because how are you going to value something if you don't know what someone is doing, right? So I think that's what made us successful, scaled up the team. And then the challenge is like what you're facing right now. How do you scale up a team? How do you make sure that if you're the operator, that someone else does at least the same good job as you've done before? And that's really tough. So you got to train a lot of people, make sure the infrastructure is right. And right now we have a good team of traders. So that means that I can get my hands off that, luckily, for most of the time and work on more projects or sitting in podcasts with cool people here, you know?
Well, the thing that I didn't even realize, like, because I've hired market makers for my own token, right? When you're there, it's literally just, oh yeah, you're supposed to provide them this many tokens, and you do that, or money, and you're not even thinking about it. You're like, oh, that's what you're supposed to do. But then you don't even know what happens to them after the fact. And then when I started following your content, I started learning about like kind of the underhanded tactics, like the loan option model. Like that wasn't something that came up in conversations with us. It wasn't a thing at all, right? You start looking at the exchanges, and we would look at our token and say that volume isn't even real, right? Or the exchange gave us like our fees on the volume, and it's like nothing. It's like, where's all this fees? It looks like your volume has all this, but we get like scraping together $1,000 after like 3 months of there's nothing here.
I remember the first time I got to understand fake volume, because you know the way I was trading myself is like doing arbitrage in a lot of markets and see if I can profit from it. And I was like, well, on CoinGecko this market has like 200K in volume, and there should be arbitrage opportunities. Well, I saw orders coming in and out, but they were trading within the spread, and I was like, how is this possible? How are my orders not getting filled while there's volume? I can see it. And that got me thinking like, well, there's just someone trading within that it might be the exchange itself that does it. And I was like, this is crazy.
Because they want to be in the CoinMarketCap list of the exchanges and volume. They want to send the list. You know, that's how it's all competitive like this, you know? And
But as an outside, like when you're just a basic, like I'm just trading, right? Or like I'm just sort of like buying things and I'm looking at volume, like I don't know, right? If I'm like retail, I don't even realize what's happening. And so I think that like shining a light on that and those practices is helpful, not only for your business, but also I think for people that are just trying to be retail and buy.
Yeah. Well, I think there's a lot of projects that can get fucked over, but it's also retail, right? Because all this fake volume, I think retail should at least be aware of like, how do you assess whether volume is real or fake? Yeah. Well, we can do it because we know exactly how do you assess depth and stuff, and then you can be like, if someone has $100 of depth on the book, they cannot have $1 million of volume. Well, a retail trader doesn't look at that. An investor would, but like it's so basic, but they don't get that.
They still won't connect it.
Yeah.
No.
You said that, it's an interesting one. And then the other thing that I think is pretty unfortunate, I wish that every project disclosed at least the market making deal they have, because I think a loan option model, if I were an investor or a trader, I would definitely want to know who is the market maker and what is the agreement you have with them, just as much as I want to know who are all the other investors. Because if you give a loan to someone and he could dump it, well, I want to know as an investor before I engage in a project. So I wish all of that became a little bit more clear, but we're not only educating projects, but I think also, investors, possibly VCs that look at deals differently.
Retail as well. I mean, loan option model, if you ask the general retail, they don't know what that means. And it's literally giving your tokens to somebody who might literally dump it into the ground, then they just buy them back at a cheaper price and give you your tokens right back.
Exactly.
You know what I mean? It's at its simplest form. That's what it is. So they're not incentivized to grow the price. They're actually, and when I was checking your content, even as you explain, it's a better fit for larger market cap type projects. Then it makes more sense because it's harder to manipulate.
Exactly.
That, and people just don't make the connections. Even as a founder, like whenever I'm reading your content, I am learning a lot as I read that, because the depth of insights that you go into, it's just not out there in the market, because it's almost like a unspoken thing, because everyone makes their money off of this, so they don't want to isolate that. They don't want to talk about this.
And I think it's pretty basic, I think, business, but the better project you are, the better terms you're going to get. It's for investments. It's for, anything that with tokenomics, you can get larger vesting schedules and all that kind of stuff. But it's even on market making deals, because if you need to get a loan option model, you're set on it. if you're a shitty project with no volume, you're not going to get good terms on the loan option model, because the market maker will make money if there's a lot of trading volume, so they can make small arbitrages. Well, if you have $1,000 a day in volume, like, well, they need to make money somehow. So they're going to make money by screwing you over rather than, yeah, exactly. So I say, unless you have more than 450K in average daily volume organically, and that might not sound like a lot, but you know, if you look at the real volume on exchange, it's quite a decent amount to get that consistently. Then you could move to either a hybrid model or a loan option model in itself. Otherwise, I would say retainer model is probably best. If you go into like the millions of dollars per day, like then a couple loan option models could make sense. And
no one really even, but the thing is, again, when they're asking you for your tokens, send your tokens here. No one even mentions in many cases there are options.
And I think especially,
I never was offered options. It was just, this is what you do. Okay. And you're listening as a founder. You don't know any better.
And I think making a bridge to like the tokenomics side, you determine how much should go into liquidity. And you're like, well, I mean, the market maker asks 3% as a loan of the supply or something. Well, first of all, they probably don't need 3%. They can probably work with 1% as well. So negotiate it down so you don't give them too much. But at least like you just accept, 3 is the average, so I'll just do 3%. And the interesting note that you made before is like, don't look at it as a percentage, look at the dollar terms that you're actually giving. Yeah. Because then all of a sudden you're like, well, I'm giving them $500,000 or $1 million.
Exactly.
Like, then
mistake.
it doesn't make sense.
Yeah. I made that same mistake. I gave someone some of the paid through the supply percent. And I'm like, then when the price went crazy, it's like, wow, that was a lot of money. You
exactly.
Know? Yeah. You know, you learn these lessons painfully, usually.
So when do you generally come in on the tokenomics side?
So usually it's when they're trying to raise some money, usually right after they have like a small seed round, a self-funding round, you know, friends and family round or something like that. Because if they just started through investors, right? Because if it's too late and they have legal agreements, then it's very difficult to change things. And so I really like to try and catch them before they start raising money through investors and having all those legal agreements, because then again, it's really messy to try and go back. And I've done that before, and it's a nightmare. I've had to do board presentations of the whole why we're doing this, and it's like, man, you know, if you can avoid that, definitely do that. But the main thing is, like, I'm usually working with them further upstream, you know, through that process, and then I try and set them up for success as they go throughout that, right? And I try and really, I guide them as almost like I consider myself more of like a startup mentor than a tokenomics consultant. That's what a lot of people kind of get that wrong. They might even work with me or whatever. Like, I'm literally going through the business model. I'm looking and saying, no, that utility, that doesn't make any sense. That's bad. That's boring. No one's going to like that. Let's change this. You know, so it's less about like mathematical analysis, because truth be told, most of that is complete bullshit, you know, because if it was right, you know, if the predictions, a lot of people who do those analytics actually was real, then they would just be buying the tokens themselves and making millions of dollars. You know, in fact, it's all looks like value, but it's not value. What supports any price in this market is speculative liquidity. 100%. There's no doubts about it. It is not utility. There's not one token in this market propped up by utility. It's the perception of value and utility that drives the market. Because you can compare the delta between utility used and then trading volume, and you see it right there.
I have exactly that question. How much ETH per day do you think is used for transaction fees in ETH or in dollar terms? Like, what do you think?
Oh, I'm going to guess a day?
Yeah.
100,000.
100,000?
Yeah.
ETH or dollars?
$100,000.
Okay, what do you think?
Yeah, maybe like 250.
It's today, it's roughly like 165 ETH.
Yeah.
Or it's between 165 and like a couple months ago it was like up to 500. It was like the peak.
300,000. Yeah.
Yeah. So that's like 750K on like the peak, and then you go to like 250K per day. And that is, if you look at, and the trading volume on ETH, I checked today, is like 15 billion. So if you do that percentage, like less than 10 or 1 basis point or something, is real utility volume. And I'm like, that is scary in a way, right?
That just shows you what you got to focus on, right? A lot of people will. I've been called out for saying, it's about speculative price. It's like, of course, that's because that's what the market wants. There's not one person you will find that doesn't want the price to go up of something they're holding, you know, and if it has utility, and like one of the best examples I will give is Chainlink, okay, as one I personally like, because if you have a smart contract, it's deterministic, so same inputs drive the same outputs, so you need Chainlink for the decentralized data. That way all the validators on the network can use the same data source and validate that output is the same, right? So when you look at Chainlink, that's one example that as a space scales, so too will its utility. And that's why I'm really bullish on that one. That's how I look at that. So I look at it through the same lens, and now you'll find, other ones will be speculative for this other reason. Everyone has like a reason why they might believe that, but at its core, like, why does anyone buy Bitcoin? It's like, I don't think many people buy it to use it. I think they buy it to hold it because they want it to go up.
I think there's a difference in Bitcoin because you can argue like a more of a store of value, while all the alts are designed to be used. They're never designed to be speculated. They have a use case, and the use case is fundraising. The hidden use case is fundraising. Right? Like, But I think so. So how much? Because I still like to talk about, and probably on the marketing side as well. Sure. I don't want to say, well, I only want to focus on KOLs that generate buying demand only. I want to focus on the real utility behind and build a real business. Like, how do you strike that balance between, of course, focusing a bit of speculation, but not to the extent where you're more like a meme token rather than an actual utility project?
Yeah, I think first of all, you have to have a real business model, and the token has to be a really fundamental piece of that. And ideally, it should have just really simple utilities, because when you get too complicated, that really prevents people from understanding that, right? Yeah. And so, like, I believe like a confused mind will never buy. That's a phrase I like to use a lot. I don't know where I picked it up, but it's the same thing. So what I really believe a project should do is figure out its simplicity when it goes there, right? And when it figures out its simplicity, then it knows how to communicate itself properly out there in the market, right? Because if it's too complicated, that's really difficult to do, right? And so you're not going to get speculative interest if you're confusing, unbelievable, or boring. Like I was saying before, like that CUB acronym, it's the same thing. So as I think about it, it really is an essence of having a real business model, having a real product that fits a good market, and then you market that, right? So because when I look at it, it's like, if you can market something exciting versus something that isn't exciting, what's going to do better? Right? And so as I think about it, like, you are trying to figure out how do you create something exciting. That way, when you start pushing it out, people can get excited about it, right? And that's the message that goes out, instead of like trying to think too much about, business model. Like, you're looking, like I look at it like a traditional startup. How can I create something that, if the token is used, it will actually create value for the people using it? Yeah. Okay, that's the difference how I see it from a lot of these other projects and how they kind of go. You can tell they're like fundraising mechanics. You can tell they haven't thought everything through. You can tell they're pushing out. They don't even have the utility live, so there's nothing to do with the token. And that's one of the dumbest things I believe is, like, when our token was live, there was something to do with it on day one. Exactly. Because the people we sold it to on public sale had a place to put the token except for the liquidity pool when they were selling. Sure. Right? That's what you think about, right? So that's how I believe it's like really how you frame that from the ground up. And then all your marketing, your messaging builds off of that.
Yes, about to ask, how do you do it on the marketing side?
Well, no, I think what Tony was saying is really interesting. I look at like any sort of physical good, right, in the sort of Web 2 world, and I say, okay, like, why is this pair of shoes $500, right? If it's an amazing brand. The shoes themselves might only cost $50 to make, but there's brand equity that they've built up because there's enough fandom behind it, and evangelists that just love it. And so, in a way, people are not speculating on the value, but they're increasing the value because they believe in the brand. And so there's something to be said about, like, if you create a really good utility, if you create great messaging, if people believe in what you've built, like, there is plenty of room for that speculative, like, I believe in this more than it's actually worth. And so I think that, like, I mean, there's a lot of sort of what Tony was saying. We've talked about this at length. People, I think, in this space tend to try to do everything at once, and they throw every sort of utility they can think of instead of really finding one that really makes sense for their business model, for what they're trying to build. And so it's like, okay, well, we do this and we do this and we do this and we do this. And it's sort of like if you hold up a picket sign with 1,000 words on it, no one knows what you're actually saying. Like, what are you protesting? We're trying to understand this. And so it's sort of like, how can we just really like sit down in a conversation and tell me, what are you trying to make? What are you trying to do that's different? And like from that conversation, it's usually not that complicated. It's just that people, I think, get so afraid of planting a flag in the sand and saying, we're going to do this and that's it. And like, that's going to be our, it's where everyone says, especially in movies, it's like a sort of famous line, but it's like the same but different, right? Like, you want to be the same, but you just want to have one thing that differentiates you in the market. And that USP, that like, unique selling proposition, like that's enough if you are able to communicate it and if people want it, right? Like, people have to want it too. I think that the last thing I'll say about this is, in this space, there is a huge like push, obviously, and a huge benefit is decentralization, right? Yeah. But unfortunately, people have leaned on decentralization as a crutch. They've leaned on security as a crutch. And so they use that as their selling prop when instead that's actually sort of a given now in this space. And so they go, oh, we do this, but it's decentralized. I said to Tony before, I was like, I don't care that you are a decentralized shoe factory. Like, why do I need that to be decentralized? Why does that matter? Why does that change anything for me? And so I think it's really about like figuring out what it is that makes you unique, and then just finding a sort of simple way to focus on just communicating that. Tell me why you're different. Tell me why you're going to help me outside of just like, if I hold you, the price goes up. Because
features versus benefits, I guess.
Yeah, always benefits. You know, there's a chart. It's called like the 30. It was like a Bain and Capital like amazing review where they went through every benefit that consumers actually care about. And it was things like you'd expect, right? Like it saves me time, or it simplifies my life, or it makes me money, or it gives me fulfillment, whatever it is. They go through like the emotional, they go through like the physical, like tangential, not tangential, like the tangible benefits, and they outline all of them. And everything that I tell people to communicate should always be through the lens of one of those 30, period in the period pyramid of value. That's what it's called. So I would look into that and just say, okay, like what benefits do I have, and how do they apply to something on this pyramid right now? Because that's all that people care about. Like it's all right there in front of you. So yeah, I mean, it's not as complicated, I think, as people make it. I just think that they're looking in the wrong direction.
Yeah. It's funny because you say this, like a lot of these things seem common sense, but I think there's a difference between understanding something and have felt that really those issues. A lot of things you say in the tokenomics make sense, but I mean, you've experienced it 15 times with projects, so you know really what the impact is if you do it incorrectly.
Myself.
Yeah,
I've
exactly.
literally lived the anxiety where you can't sleep.
And then you really understand it, right? Like there's so many quotes I've heard about like hiring people in a company, and I'm like, well, of course I'm not going to make those mistakes. But unless you felt it, you really understand. It's the same with tokenomics or marketing, I guess.
Yeah, it's so funny. Like honestly, the way that we look at it is it's almost like before marketing, right? It is so valuable to marketing because you could have endless amounts of money, but if your messaging sucks, you're just going to see billboards that say nonsense on it, right?
Exactly,
like I could give you a Super Bowl spot right now, but if you're telling me about something that makes no sense to anyone, then they're not going to your website to buy whatever it is, right? So, and also like, and what I will say is this, like I have a lot of issues with marketing in Web3, right? I think that there's a lot of like fundamental differences between Web 2 and Web 3, and I respect that. But I think where Web 3 sort of gets it wrong is there's a lot of we put a lot of weight on KOLs, but sometimes KOLs don't have the best interest of the projects in mind. Some of them are great. Some of them are real thought leaders. But there are a lot that I just don't think necessarily translate because they're not really like behind your brand. They're just going to pump it. Their community's going to front run it, then they're going to dump it. Yep. And I think that if that's your marketing plan, like you're probably dead. Like that's not enough. You have to focus on how to generate, really, it should be earned media, right? How can people talk about you without you having to spend money? That's the goal.
Ambassador is what I call them.
Yeah. Yeah.
I want to share something in this too, because it's like the way I think about it as well. The way I think about it too, like with the like KOLs, ambassadors, just marketing in general. You'll find a lot of people when they lead into their project, their token launch, right? You're marketing really hard into this because you want a lot of volume. When you get on centralized exchange, decentralized exchange, right? That's when you get that big push, right? You want to go up from there. You might even have some Launchpad people selling into that volume, right? You need that volume to help liquidate that, right? But the core thing I always think about too is like, as people are like marketing this stuff, as you do that push, how do you scale that spend back? Because if you just keep spending the same to KOLs, you're actually going to exhaust a lot of your marketing budget. Yeah. And you're actually marketing to the same audience in many cases. So you actually have what's called diminishing returns. If I've got 100,000 audience as a KOL and I've posted 3 times, very unlikely new people are going to see that convert. You're still paying for this, right? So as I think about marketing, it's almost a game of playing with attention. So as you spend a lot of budget when you're going into the excitement, and then shortly after that, you start to pull that back, right? Until you have the next roadmap thing, and then you can hit that and you got budget. I find a lot of projects, their biggest mistake is they just keep marketing the same thing and going over and over and over again. And this is what happened with me in some cases too. And before the time you realize that it's diminishing returns, you've already lost 100 grand, 200 grand. You know, that's what happened with us. Like, it's not working anymore. What's happening here, right? And you realize, oh, diminishing returns. You know, and that's how you learn these things in this. often painfully,
Yeah.
this market.
Yeah.
I think the other thing is like the more hype you build right now, or the higher the price goes, the more you have to live up to that hype.
Yeah.
Because
Yeah.
it's hype, and
True.
if you don't deliver at some point, it's the same with getting an investor on board and having 6 months vesting. That means you have 6 months time to deliver. If you don't deliver in 6 months, you'll be crushed after the vesting ends. And it's the same with marketing. If your price goes up, well, how do you make sure that it doesn't dump tomorrow or the week after? Well, you got to spread it out maybe a little bit more and have a clear roadmap so you can actually slowly deliver on those promises that you make.
Yeah,
Yeah.
absolutely. It's well, a lot of things too is like you can control the chart so much, in what you're doing, and then you can't in many cases as well, right? And so a lot of I felt like if the chart's going down, I'm doing a bad job, right? Well, it was the bear market. I mean, every chart was going down. Like even the larger cap altcoins go down 95%. So to think your small cap isn't going to get crushed,
Yeah.
99% down, then you're paired with whatever the ETH or whatever it is, and then that's going down. They don't understand how that's dragging you down because your token's paired with that asset that's falling in price,
Yeah.
So it's like, oh, we've gone down 50% in 4 months or whatever. Well, you're paired with Ethereum, so even if you stayed the same in price, you would still be down 50%. So people don't understand these connections. It often you understand them after you make the mistakes. So
One thing I want to sort of add to what we were saying before. I've noticed, and honestly, even being at 2049 now, the side of it's talking to a lot of people. A lot of projects are now looking at what Tony was mentioning, which is like business model, which is great, right? They're like, all right, the token is one element, but how can we actually make money? And so often, I swear to you, it seems like brands and brand integrations and brand partnerships are going to be part of the business model for a lot of these tokens and a lot of these projects. We do this, and we're going to get brands, and they're going to buy our token, and then we're going to let them do this in our ecosystem. And I've worked with brands, right? When I was an agent and doing deals, like it was only with brands. And so I understand that when you speak to a brand and you mention anything in Web3, like their initial reaction is going to be fear. They're going to say, okay, what is this? How is it not a scam? How can you protect me? And you need to be so clear about what you actually do and communicating like in all of your materials, whether it's your websites or it's like, your light papers, whatever you're sending them, they need to understand because they're going to try to sell it to their boss, who's going to try to sell it to their boss. And if you want to tap into real money, like they need to understand that you're not just this sort of niche fringe potential scam. They need to know that you're a real business, and communicating that to them is so important because they will not be your investors. They're going to be people that don't understand the space that you have to convince to give you money.
But ideally, you don't even have to mention the crypto stuff.
That's 100% true.
It depends on how fundamental it is to your company, right? Like otherwise you have to be open up to it. But otherwise, I think it's a better solution, and crypto is just you don't have to mention it. Ideally, there's another way of getting around the token where you purchase it for them, and they don't have to be scared in any way.
I completely agree, and which again is like part of the reason that when you have whatever it is, like you need to be able to communicate the utility of what you're actually building. Because then when you're talking to them, all you're telling them about is the utility to them. Like, why does it matter? And if you have that pitched down, then that should work for your entire market anyway.
Yeah.
People want to know, like, okay, well, why is this convincing? Like, why do I need this in my life? And obviously, when you talk to brands, it's going to be different than when you talk to investors and retail and whatever. Oh, that pitch always changes, but it's always a version of the same sort of elevator pitch, right?
One other thing that, we haven't touched upon was, I think Brave Browser is a good example. I don't know the full tokenomics and what the use case of the token, but I think a lot of projects focus on getting buyers on, but how do you convert those buyers into users? And I think Brave Browser, I think their way of marketing was the token because everyone knew Brave, the token, but there's also, of course, a product behind it, and they start using it. So I think you can also use to your benefit where it's a cycle where people buy it, well, then they use it, and then they're like, well, I'll buy more because it's an awesome product, and you get like a nice cycle that flows around.
That's the thing, because right now people buy hard currencies in video games. You buy things to use on Audible to get your books. So like people buy this. You're buying credits now for AI.
Yeah.
People buy that stuff already, right? In this case, it's a limited supply. It's a token. You have utilities with it, right? There's stakeholders. You can do governance. You can do a lot of different things. But at its core, that's what it is, right? Because if there's no reason for someone to buy and use it, that's going to be a very tough marketing job. Like that alone will determine whether or not something will be effective or expensive or ineffective. Will be like what you're actually pushing out. Yeah. And you see people make this mistake all the time. And that's why I believe like Brave, there's simple examples of what you could use the token for, right? Like Chainlink, that's a simple example. You could do like the cron jobs, or you could run the automations, or you could, have the Oracle for the data, right? But it's a very simple thing in essence. And as I explained earlier, it's used everywhere. Every smart contract that needs data needs to use that, right? And if you want to automate things, then you're going to use Chainlink for that, right? And so it's like, that's how I see it at its core. And so many projects don't think the right way from what I see out here. And often when they come in, especially tokenomics, it's often, I have one I'm working with right now. I keep joking with him. I'm like, you're a developer. This guy's going to be like, he looks like he's in his 20s. This guy's going to be like 50 before he finishes building all this. I'm like, we got to get this down, guys. Like, they don't understand that, like, it's easy to write the idea on paper, and it's very time consuming and troublesome to execute, right? So all the more things you're writing down, it's easy to put it into a pitch deck, right? But at some point, someone has to make all that stuff. And that to me is also a big flaw, is people don't push something. Like, I'm a big fan of the lean startup, Eric Ries, he has a great book. And it's like, you push something out into the market, you can learn as quickly as possible.
Exactly, yeah.
And so many people don't take that approach, even with their utilities. It's too complicated, too much stuff, right? They think they're seeing smarter by building more. Well, you're not, and you'll often find that they take so long to even get it to the market. Now they'll even miss the market altogether in many ways, which is crypto, which is also another whole thing itself. If you're going to catch the bull run, or even try and, like a lot of people I see now are trying to catch the bull run right now. You got to be launched to do this, right? It's like, I remember 2021, remember Plan B stock to flow model. Everyone was saying it was going to go up, and it was like, this is going to be the bullish year. It's 2022. And I did. I looked at my Binance in December 1st or so of December 2021. I literally said, I've done pretty well here. I sold everything. I put it all in the bank, right? Like my wife was asking about it. I put everything in the bank, and that's it. Any altcoin. The only thing I've never sold is SAT in all the time here. Never.
That's good.
All my altcoins, because that goes down 95%, right? And so I'm looking at this. I'm like, I'm doing great. All right, I can live with this. I sold it.
Nice. That's really good.
But when you think about it at its core, like, how do you, as a founder, even predict timing? I don't even know how you do that. I think all you can really try and do is like really build something again that has a real viable business model, has a real market behind it. And that's what so many projects will do wrong too, is how they pick their markets. I've noticed as well. Like, they'll pick these markets that are very small, or they'll say it's this massive market, but you're this little tiny fish and the market has never even tried anything Web3. Now you're going to try and penetrate this.
You mean that the market on like the Web 2 market is too small already, and then they're like, hey, let's find a niche in a niche.
Yeah, or they're like, I'm going to go into this market. It's like, you've never even worked in that before. How do you know what the problems are?
But then they start with a token probably, rather than...
they start with a token, and this is the market we're going to go after. It's a 400 billion, tam sam sam, all this, and it's like, well, okay, it's a big market, but these people probably would not want to use this kind of a solution. That's where it goes back to what you guys were saying earlier, like the centralization, because someone doesn't care about that, you're not going to make that a USP. You know what I mean?
Exactly,
like in my case, I'm a gamer. I was just talking to Mike about this. Like, I wish I could get my character Tony from World of Warcraft. In 2005, I had the name Tony on the Malago server. #1 rating guild, right? The PvPer, like really hardcore, like a gamer. And that account, I gave it to my friend. But what if that could come back? What if I could own that as my real account? And now I had that in my history. And I have nostalgia today. I lost the account, right?
I lost.
So was I. Yeah, lobster farming, all
sold.
this. Yep.
I got my RuneScape account to like 99 wood cutting, 99 fletching. I maxed this thing out. I skipped every day of school. I spent money. It was a joke. And then I went to sell the account. I sold it on eBay. When I gave up, I was like, I'm done. I'm gonna like move on. And it was a sad day. I like cried when I sold it. But I was like, this is it, man. I sold it, and then maybe I got like, I don't know, $800. It was like a sick deal. The next day, he did a chargeback because he said that I didn't give him the account, and because it wasn't a physical good, there was no shipping, and so they took the account and the money, and I got scammed. And so that was the moment I was like, there's got to be a better way.
See, that's a great example right there, because you could have the transfer of that token, right? That is the NFT. That's why tokens exist. It's for that purpose, to add the value and to add the trust and to, really add value, right? And if a token doesn't add value, then why have a token? It's just more, it's more friction. It's more technical stuff. It's more communication you got to do. It's harder marketing. Everything is harder at the moment you have a token, right? But you also have this really cool upside where you could build a community around what you're doing in your project.
Yeah.
And that's what I love at its core. It's like, if you can rally a community around something, get their feedback, and really build a product with them, I think that right there is next level. And that's what I personally love about this space.
A couple of things I want to go into has to do, I think, with more like a community round, Launchpads and private rounds. And I think a big one, you talked about the mass extraction game, high FTVs that people launch at, and like all those tricks that they play. But I think the first one is how do you go about, valuing your project? Like how do you determine an FT fee? And I think just now that you have like, in Web 2, like a nice model for it based on revenue, you got to like do this, or how would you approach that at least?
Yeah, so that's actually still a very tough thing to do, right? And so it's usually going to be a function of, like, you can look at kind of some of the tokens out there in the market right now on CoinMarketCap. You could do some research. You can go on sites and just check out when they listed, what their private round was, and all this stuff. So there's sites out there you can kind of browse for that. But I really look at it as, how much do we need to raise to build this and have some runway? Usually a couple of years, right? And also, can I raise some of that money through an equity round instead of just through the token? And if I can do that, then I can shove that value through equity in some portion instead of pumping it into the token and inflating FTV. So I look in, and also some project will say, well, we can't sell equity. Well, oftentimes when I hear that, that's because you're not making any money and you don't have a real model, right? Exactly. And so the thing I try and work with founders on is like, look at the projects that are out there now that are still surviving and thriving. And there's one common denominator, they make money.
Exactly.
Look at Aave, Uniswap, just pick any of them that are out there for years and you'll find they're making profit, because you have to. And so if you can't raise any equity through your token, or sorry, through your token, right? Or through your company rather, through that, then that's a sign right there that something might be off in kind of that business model. So that to me is one of the first things. Then if you can kind of understand how your revenues can look, you can start to build kind of a story from there. You could do some research and see. And what I will also do is I'll look at the Launchpads. Like I'll go to Fjord Foundry and I'll pull that up and I'll see, all right, what's selling and raising right now, right? Because the biggest mistake I think people will make is if you're going to the market with I see some like a $500 million FDV, like you cannot do a public sale because your FDV is so high. And then you have to sell so small of a percent to even raise enough money, right? Yeah. And if you said, well, we're going to sell 10% of our supply, that's $50 million. You're not going to raise that through a Launchpad. Like you will not extract that through there. So they end up in these really bad positions where the only way they can get distribution then is through airdrops and things like this because they can't sell the tokens. Yeah. If they try to raise the money through there, they would drain all the liquidity out of their community and they would have nothing for launch. So they're in this spot where they have to do that. They have to distribute through that. And usually the game is the VC's buying a lot lower. They jack up all the price and then everyone gets multiples off of this. Yeah. And even some tokenomics people even get percentages of the token supply. So now they're even incentivized to go ahead and create a high FTV when you think about this scenario. So as I look at the valuation, it's like fundamentals. It's looking at, are you making money? What's kind of the model look like? And oftentimes we'll review revenues and really try and I'll simulate the business model in a lot of cases through machinations and try and show them how their model works and the big levers that drive value. And from there, we can usually get good valuation. But again, my key target for a project going to market would be like a $25 to $75 million FTV if they wanted to do a Launchpad. Yeah. Because otherwise, you're going to be too high and you probably won't raise the money.
What if they don't have any revenue? Like, how would you approach it then? Would you first say, like, hey, then work on your business model first before you launch a token? Or would you say, well, we'll still launch, but you're just going to have a harder time?
Yeah, well, the revenue, I always look at it in the spreadsheet, financial projections, like the pro forma, right? That's what I'm looking at that through that to see how their model is projecting and to make sure it's actually real first. It's not bullshit, right? So there's the assumptions you go through and you really refine all that. So that is going to tell you whether or not your model will usually have some profitability. And, but again, the early traction, like before you can really, like you were asking about traction earlier, before you can start raising money off from investors, they want to start seeing some of that, right? So if you're showing you're starting to make some money, you're showing you're starting to get some demand on your platform, right? Yeah. And maybe your token isn't live, maybe it doesn't have to be because people can still come on and use the platform and you see it all the time. Like you're actually getting real business on here, real people using it. You're getting feedback, you're building a community, you get feedback from the community. Investors love to see that stuff. When you have nothing, and you're just going there with an idea, well, now the only way they can evaluate you is who you are as a team. And so it's actually much more difficult to get investment like that. Yeah.
The interesting part is that if you build out an MVP to a certain extent and you make actual revenue, like that means you can also just do it without a token. So sometimes the question is like, well, why even get a token in that case? Because then it means you can do it without, or it needs to be, well, it's doable without a token, but it's better with the token.
That's exactly it. Because you can exchange value. People were trading before money, right? It can be said about a lot of things that food. What difference does it make? It just just eat salad every day. You'll be healthy, right? It gets boring, right?
Yeah.
Or that's not the best thing, right? So when people ask, do you really need a token? I don't think everything does need a token, but like you said, can it be made better with a token? Can we have more transparency? Like, for example, the social network, does that enable the early participants to own a share of the network, then have governance? That adds value, you know, and you can do that without a token, but you can do it with a token and make it even better. And that's the frame that I always tend to think of it through. So, but if you can't make any money, you know, the space is so expensive. Like once you start figuring out that, hey, market, like how much is a tier 2 exchange right now?
I think the basic one is MEXC is 60K in total, 30K tokens, 30K USDT.
There you go.
And then you got to lock up 30K and 30K USDT, 30K tokens in liquidity as well on that online market.
Yep.
And you probably got to supply some more USDT the moment selling pressure comes on.
Yeah.
So
in KOLs, leading into your public sale round, you're normally hundreds of thousands of dollars, you know, in PR
Exactly,
and in marketing, right? So when you look at, if you don't have a way to make money, no matter what, your business is going to crash and burn because you're not making anything. There's no inputs of cash.
Yeah.
There's only outputs.
I think a big struggle.
Except for selling your token.
I think a big struggle before that is investors and how do you get the right people on board. And what is a normal lockup period that you would recommend for investors?
Yeah,
you know,
good question.
and when do they get in, and what discount, so to say, compared to like, you know, the TGE price? Like, what is the maximum profit you want to give to them?
Yeah, that's a good question. So first of all, I'll address like the first point is how do you actually get in front of these people, right? And I think the way I found it to be true, you know, is your network, and that's the biggest thing you can control. So when I see people who are just like trying to do a whole bunch of cold outreach to the VCs, it's like everyone else is doing that same thing. So you're just like, it's like where's Waldo? You're trying to stand out in this massive crowd, and it's ineffective, right? And so I believe the most important thing is then figuring out how are you going to build a network that's going to be in touch with investors. That way you could start to build trust. And that might even be joining a founders community that has them there, joining an accelerator program, working with other partners that also know investors that can help you and stuff. You know, that to me is ultimately like one of the most important pieces of doing that. That's going to drive a lot of the success. Also, having some kind of traction, because I think investors want to pour gasoline on, they want to pour like gasoline on a fire. They don't want to like be the one rubbing the sticks together. You know what I mean? So you got to think about like, there are some angels that like to rub the sticks together, and that's where they like to kind of bet in there. But most like to pour gas on something already working. So if you don't have any traction, it's like the car hasn't gone anywhere, but trust us, give us some gas for the car. It's like it hasn't done anything yet. You haven't proven anything. Maybe you've built something, but if no one's on it, you haven't even proven you know how to market. You haven't proven that people like this, you know, especially if it's a new thing, you know?
So how do you, like, what is then the amount of vesting or like that you would recommend for these investors, or how much at a discount can they get in compared to like, let's say the Launchpad price, or let's say the TGE price?
Sure. So I think like vesting for me, at minimum, I'll look at like a 6 month, you know, then maybe like an 18-month linear after that point. So then you're at like a 24-month total. Yeah. My preferred, you know, I say preferred because they will pick what they want. You know, you want the money, you got to do this, right? So if you have to do it, you could take that. But I would prefer a 12-month cliff and then 24 months after that of a linear vesting. Okay, I believe that is a good, nice way. And I believe the team should have something very similar to that, as should the advisors. So everyone is kind of aligned around the same thought process in that kind of a thing. And
have you seen vesting schedules and cliffs kind of like shortening over time, or actually getting longer as the time passes by?
Yeah, they have. I have seen them. You know, funny enough, just a couple of weeks ago, I saw a post where someone was saying, you know what, exchanges don't like 6-month vesting cliffs right now. You know, like, so I think it does change based on what's happening, and I think that might have happened because,
you said?
Yeah, that's what I heard. Yeah, because I think...
Why would they be interested particularly? Like, unless you're a Binance, you have to do really good due diligence, but like an MEXC, like...
That probably will. So, but you always have to take this like a grain of salt. But the way it was also at a time where, I forget what it was, Mantra. It was crashing, right? And people were blaming all this. And so that was during the time where it's like all the lockups and when they get the tokens. And so when chaos kind of happens like this, it's almost like people start to change their mindset, right? So, but I would say at its core, like a 12-month cliff, 24 months vesting is good. And then the ROI, you know, again, I'll try and think about like the long term of a project. If I can get like an early private investor, like a 2x, 3x, I think that's pretty good. Yeah. Some clients want me to give them more, right? And I will if that's their direction, because they are the client after all, right? But I also want to be careful because the more ROIs you give them, the higher valuation you're starting off, and then the harder it is to raise money through the public sale allocation because your valuation is really high.
And I think that's the battle. Is like who do you reward? Is it going to be you're going to reward the investor in a way, or you're going to reward more like community by having a more sustainable token charge, so to say?
Yeah, well, you could do both because if you think about a model that has fiat and it makes fiat, then you can sell some equity. So again, that's where I really will work hard to get a side letter allocation, something like this and I have a whole template that's separate that will show them that if you buy pure equity, we'll give you a side letter of tokens. And because now that value didn't shove into the token value, doesn't inflate the FDV as much, now we have complete flexibility in our valuation. And we can actually give them liquidity through an exit, but that's the token performance, right? And that's also a smaller amount then because they also own equity in a real business model. And that's the way I would prefer to do it. A lot of projects can't do that, for whatever reasons, or they don't do that for whatever reasons, but that's my preferred way to really help with sustainability. Because again, when I look at this, it's like, how can a project be all about decentralization or community when most of the supply is owned by the team and the investors? And the community has like 1% of public. It's like you're fighting over scraps of supply, right? And the only way you get distribution then is if the market makers dump. No, I'm just kidding. Right? You get their tokens and they dump, right? That's when you get distribution or an airdrop happens.
Do you ever discuss? Is there ever in working with VCs or investors like an exit clause on like how they can liquidate? Because we work with a couple of VCs where we do their liquidation. They have a huge amount of tokens. Well, if they do it themselves, they click the market sell button 20 times and they dump the price. If we do it, we would slowly with limit orders, over a longer period of time. Like, are there any clauses? Is it normal to put those into, the investment rounds and stuff?
I haven't had to do that. I've had to do like some, like MiCA regulations is a big one right now that I'm doing, for that. But like just being clear on how it works, burn mechanics, or are they automated, or are they algorithmic versus manual price manipulation? That's the thing right now that I see more technical stuff they want. But other than that, I haven't seen as much with venture capital, but usually that will take place after I've done my work, because they're kind of pushed out, raising on their own. And I don't see as many of the legal agreements unless I'm aware of something that they want in there, then I'll make sure it's there.
Yeah.
But, usually I try and give them some flexibility and I tell them, I'll try and give them a few options when I'm building this out to really try and help set them up. But again.
And I mean, it's also not in the VC's best interest to start dumping the token because first of all, they ruin their reputation. They don't get a good exit price as well, and the community's not going to be happy. So they're not going to get a next round in possibly. And I think at least that's what we do the loan option model reviews. We say like, hey, if you do this, negotiate kind of like how they can liquidate and what the terms are around that. The DEXs are the worst place to liquidate because of direct price impact.
Oh, big time.
let them only use limit orders. They're market makers. They can slowly liquidate prices, or put once they execute a loan option model, put some kind of like vesting in at least, or like a linear vesting. So it's spread out over time rather than there's one big dump or liquidation event happening.
People don't understand like literally you can have like a $200 million market cap project and you see them out there. They got like $1 million in liquidity. Now and then you go to the holders list. And when you go to the holders list, you'll often see the value depending on if you'll see the value of their holdings. Well, what you realize is, one whale could really destroy this whole thing if they wanted it. And
exactly.
The example I like to give is I knew the guy that found one of the Shiba Inu investors that bought the pre-sale, and it was like a lost wallet, and they found the guy somehow. He found him. And this guy gave the guy that found him even $1 million because he didn't even know how to get to his wallet, like all this stuff. So he helped him get there.
Wow. And
he unlocked, like, I'm not kidding you, this is like $20 million or something insane because it was the original Shiba Inu pre-sale wallet that he bought. And it was like billions, right? And so then you see that one guy, you look at the chart at that time, it's like,
probably because he doesn't understand.
You'll see it in the chart. It's like crashing. Now it's probably crashed because of the meme, but when that happened, that just shows you it's like one person who had that creates so much panic and fear because where they were selling through? The decentralized exchange. You just watch them just nail on it. And then all the other exchanges are getting arbitrage. They're all going down with it as well.
Yeah, exactly. Yeah. And then we as the market makers get calm. We're like, hey, what is happening here? And then we have to explain to them like, I don't know, dude. Let me look on chain what is happening.
So here's what I think about. Like, okay, I've been in projects before. Okay, like in the last bull run where you're in these smaller caps. It's like you don't know what's going to happen. Very degenerate type things, right? You're in there, And then they do they hold a meeting, okay, for something, okay, you're a voice chat, and you go there. And they're telling you live that there's a problem with the project. You might have like 200 people there, okay, or 100 people there. And you'll watch in real time as the chart literally crashes and burns. And that shows you how small amount of people have to not believe to kill the whole thing. When you start thinking about that, right? And a large market cap doesn't have that. But most projects, if you're in like a 25, 50, $100 million, you're in this kind of realm, it doesn't take many people to crater you. And the other mistake I see people making, this goes back to marketing. One project, I'm not going to mention the name, but I looked at their liquidity pool, had like 35 grand. Their valuation was 25 million. I saw them spending a ton of money in marketing. They were VC backed. Okay, they're VC backed, spending a ton of money in marketing. And I showed the guy, I said, you know what? No one can even buy 10 grand in your token right now without a price impact warning on Uniswap. I said, why are you guys doing this? Like, you're marketing, and you want to bring in buying activity, but no one can. I mean, you don't even have the red carpet rolled out if someone is interested. Literally, you give them a red flag and say, do not buy the moment they try.
I think it's funny because often market makers are seen as the guys that bring in trading volume. We don't, because if this is the funnel, right? You get awareness in through marketing is what we're doing. Well, they read your white paper, this is where fundamentals make sense and the whole tokenomics and the liquid holders and stuff. And the last part is liquidity, and that's where we as Enflux come in, or any other market maker. Can they actually, once they go through the whole funnel, can actually come in and buy 10K? Yep. Well, and if that's no, you spend a bunch of money on marketing for nothing. Yeah, and it's a big risk.
I told you the guy. This is a different one. This was like a couple of weeks ago where I didn't want to mention the name. This is another one because I'm trying not to do that. Just so it can never get out.
It's sometimes.
Just drop it.
This way, it can never get out. No one can ever bring it back to me, right? But literally, I watched in real time, okay, as their token was listed. This was a venture capital backed token. Again, it had 50,000 liquidity pool. Okay, it was on base. The contract was a proxy contract instead of a real ERC-20 smart contract. So you could upgrade it, you could change anything, right? Also, a major red flag. No one wants that. But at its core, I watched as the volume was like 300 grand on daily for like a week. Then literally within one day, it crashed to like 10,000. So I knew the market maker volume got turned off. But what I also found is $30,000 was now missing from the liquidity pool. I saw that going to the wallets because I'm a pretty good wallet tracker. I have like a really good memory like that. Like CAA8, that's the last four of his wallet when he was in the project.
Docs, dude. Docs.
Right, I have a real good memory like that kind of stuff, right? So I'm looking through this stuff and I'm like, oh man, there's something crazy is going in here, and I could see it going to the volume bot wallets from the market makers. You see the funds that you're changing.
It's funny because you can see on charts also on like centralized exchange if there's volume, because you see sometimes there's probably, if you go to the 5-minute chart, you see periods where it drops to like zero volume. Yeah, and you see very nice like volume bars, but nothing for like 15 minutes, and then you see something again, and you're like, well, what happened here? Well, is MEXC broken? That's probably what they will tell the community. But like the volume bots is down.
Exactly. And the volume bots were something at one point, because if you wanted to be like on CoinMarketCap and trending and stuff, you needed to have a certain amount of volume, right? And so this is the unspoken part of the space, is there's so much black market stuff. Like if you think about like just getting your project on CoinMarketCap, you had to pay these backdoor people, $5,000. You got to pay them backdoor people, then it's a markup on a markup. It's like, why is that a thing? Or you're going to wait 3 months? Like anything you wanted to get done is a payoff, often to some shady like black market participant. And if you don't want to go that route, no problem. Your token won't be on CoinMarketCap. Like you wait 3 months. It's like that's the part that in the space I think people aren't expecting too.
All of this does make it so much harder to bring new liquidity into the space because it's intimidating. Like I've tried to onboard so many people in my life into crypto, and they just don't get it, and they're like, there's bots, there's AI, it seems fake. Like they just don't understand any of it. And when they try, they're just like, it seems so like clandestine, right? And I think that what's cool about what Tony does, to his credit, just watching him, it's funny, I said to Tony today, I was like, you're a thought leader. Like people call you a thought leader. He goes, I don't consider myself a thought leader. He's like, I'm not a thought leader. I'm like, yeah, that's what you would say because you're not selling being a thought leader.
You're a KOL, dude.
He said it to me. I said, that makes me feel actually weird when someone says that. It just does. I'm like a very introverted, nerdy guy. I just like to help people. You know what I mean?
But so much, and I've seen him dash people's dreams in the best way because he's so honest with them, and he knows so much about every aspect of running a project because he did it so successfully. And so like he'll just give it to people very real. And what I appreciate about that is that's the only way you're going to bring forward the space. Like the education that he's doing and obviously that you're doing, like it's just going to change the landscape. And I think that, marketing is one, very, very big aspect, but I actually would like to see it like met by product. Like I think that the product meeting it and then like all of the ability to explain the product meeting like where marketing is. So marketing doesn't need to tow everything. Cause I think a lot of what happens right now is marketing is towing everything because it's all speculative, right? But it's interesting. I think what you guys are doing is actually helping advance the space.
It's a multiplication factor, right? If you score 0 out of 10 on fundamentals and a 10 out of 10 on marketing, 0 times 10 is still 0.
Right. Then you're a
and
meme and you do this.
Exactly. Yeah. You talk a lot about Launchpads as well, and then you have a fair launch and everything around that.
Yep.
I know there's some shady stuff happening within Launchpads as well, and you have a favorite, I know. But like, can you walk us through a little bit more like the things project need to look out for when they go, engage with a Launchpad?
Sure. Yeah, the number one thing is I always do due diligence. And like one of them that I'll just say live on the podcast is Seedify. They've complained to me before, hey, don't mention us. I said, what do I care? I'm not going to recommend you anyway. Like that's what I literally told them. Like, you're upset. I said, what do I care? I'm not going to recommend you. In fact, I've shown how you go back through the projects. They used to hide the projects that were listed. They only had like 10 on the homepage. Seedify has been around for years, right? So how you only have 10, but you're hiding the past launches. Now they show them. Right? But when you go there, you start looking at the charts, that's where you start to find some really weird type things. So what I would do first in the Launchpad is go through the prior projects, look at how they performed, and check and see how much money they raised. And the second thing is to check if they have a refund policy, because this is the next thing. Yeah. The Launchpads will take like 1% of your supply or whatever the fee is, right? And they take that. So think about this. You raise all the money through the Launchpad. Let's say you raise 500 grand. Okay. Now you go give them 1% of your supply. Now there's a refund policy, so you don't get the money yet. It's sitting there. So now what do you do as a project? Well, you're raising money through the Launchpad because you don't have money. So you're not going to scrape all the little things you have and cobble together this little tiny liquidity pool and put it on the Decentralized exchange. Then what's going to happen next is the Launchpad company is going to take their supply and start selling the crap out of that. In Seedify, I found on average about $50,000 was sold of the token. Okay,
oh, damn, yeah.
And I watched, and they would sell 250. I don't know if this is them. I'll just say that here. Okay, I don't know for sure.
Allegedly,
but something is strange about a $250 bot sell repeatedly that usually ends around 1% of the supply sold, especially off the same Launchpad.
Yeah.
Right. And so you'll see that. And so I go on Dex Tools. You can see the top ROI traders, and you'll find they haven't bought any tokens. They've only sold. Then you can hit the filter, and you'll see all the red lit up, and you'll see all of it.
I've seen the picture
and
that's shared.
And that's what I'll do is I'll look at all that. Because I'm actually looking at data. I'm not believing what a business development person is going to tell me because they're incentivized to sell me on the Launchpad. That's how they make their money. So I'm going to think all of that is bullshit, and I'm going to go and use the strength of the blockchain and see what's true, right? And so that's what I would say. If you don't know how to research yourself, get your technical person, get somebody that knows how to go through it and do a lot of due diligence. The one I like, and I'll say this also has some of its challenges, okay, as Fjord Foundry. The reason why I like this is because what I found in that platform is usually you're able to raise, most Launchpads you're going to cap out like 250,000, 300,000, 500,000. If you're lucky, you'll get up there. If you're Foundry, I found some that have millions that they've raised.
Oh, wow. Yeah.
And I've actually tracked, like one of them, I think it was Pear. Okay, they raised like 6 million. I've actually tracked on chain the money, and you get all of it right away. There is no refund policy. So as a project, a refund policy is a massive risk because if your token isn't performing, and a lot of them, you're literally rolling the dice, right? If you're not performing, everyone will be refunding the money that you raised. So not only did the Launchpad sell and take all of your liquidity from your money you put in there, you also didn't get what you raised. But yeah.
So there's still a private round, right? Like because some people can still put that money into the liquidity pool, so there should be some liquidity, but that's generally probably not enough to
here's the thing.
Selling pressure.
When I've reviewed a lot of budgets and I explain to people, here, show me your liquidity pool budget. They're like, what do you mean? There is no line item for DEX liquidity. And that's what I mean. If you think about it at its fundamental level, they don't know what that is. They don't know how much to put in. And then now you're in a position where you're looking at it and you're surprised. And that's what I believe is, I don't believe they're doing it out of unethical or bad. I just believe they're fundamentally surprised because I've seen that firsthand. I've shown them in my template. You got to plan your liquidity and your decentralized exchange. How are you guys thinking about this? How much you got to put in there? We don't know. They don't even know how the exchange works. Okay, and so this is the thing I would say is you find that gap to be there, and that's usually the root cause is they were not planning, and then they were planning on the private funding. again, they had a whole budget they presented usually when they raised that, but it didn't have liquidity in there. It usually never does.
I have a similar story on a smaller tier 3 exchange. They were doing a raise as well, and they had a special rule in the agreement that the token price cannot go lower than the price that the investors buy at. So you basically say price cannot drop below, and you need to give everyone a profitable exit.
Yeah.
And I told these guys, well, don't do it, because everyone is going to dump, and everyone's going to dump at a profit. That means you're paying for it.
Yep.
And you pay 10%, fee to the Launchpad, so to say, on the centralized exchange. So this is literally what happened. Like the market maker, this was the Shady thing. They could not use us as a market maker, because I would have dropped that price for them if they had to, if they told me to, because they're my client. So I'll do what is best for them, not what the exchange tells me, or whatever agreement, have signed. But they had to use the market maker from the exchange. That's the Shady thing. So that market maker would not, breach that agreement that they have signed and let the price drop as it should, if there's too much selling pressure. So it was shady stuff where, I don't know. And I was like, well,
there's a lot of that, man. You're just expecting people to tell you and guide you the right way. You don't realize they're like hugging you, but they're stabbing you in the back at the same time. You know what I mean? It's
the thing I don't understand is, like, then that exchange, how are you going to sell that again? I mean, these guys I think they were looking to sue them, and they grabbed like 5 projects together that had similar issues but never really spoke up. And I think they're making a case out of it, but they lost a bunch of money out of it. And those things, what I often say is, like, market makers, we don't make projects. We don't make them succeed particularly, but we can break them with the wrong deals. And the same with Tokenomics, same with making mistakes on Launchpads. Like, those are crucial things that can break your project. And, and I think that's why you need a professional like you on board, or on the marketing, you guys, like, so these mistakes are not being made.
Yeah. And again, a lot of it goes back to not understanding value. When you're like, oh, it's only 2%, it's like, that's $2 million or something this. Like, that's also another piece of it. They don't realize what they're transferring to someone. And that's another thing where I'll catch them giving me percentages. And in my template, that's why in my template, I actually have a whole separate, like, group of rows and stuff that actually has different market cap levels, and you can actually toggle it and change it. And so the reason why I did that is so now you can not only see an allocation at your launch market cap, what it's worth, but now you can see what it's worth as it scales out. And that was like when I mentioned my biggest flaw in my own project is we were very much community oriented, very super low cap. A lot of, over 70% of the supply to the community, like 72% was in the floating there. Our private sale, there was no different price. You could buy 3 times more. That was it. Okay, very fair. Everything was fair. And there was a limit to how much you could buy as well, right?
Oh, interesting.
And so it was very fair how it put together. But we didn't expect that the price would blow up that much. We didn't expect to be like 200 and something million in 3 weeks. Who would have? That was like a mind-blowing result. You know what I mean? It was like the fastest growing GameFi project of that year, when you look back on it. But you're not expecting that. But if you look at the value then of something as it scales, you might look at a rewards allocation. Like I was at a speaking event yesterday, they were talking about, you can earn a reward just by walking around. Mike was there with me. It's like, you can earn a reward just by walking, just by doing this, and you can earn tokens, and you can pay mentors with this. Like, why would a mentor care about being paid in tokens that are probably worthless? You know what I mean? No one wants that. They want dollars. You know what I mean? They want some token that you earn through walking around. I mean, how is that value? So, but I think if you were to look at their tokenomics, probably a lot towards rewards. And when you look at their valuation, which is $2 billion, and you look at 30% to rewards, that's a ton of money. Now you're talking, like $600 million of rewards. Yeah. Right now, when I look at their liquidity pool, $15,000 was sitting in the DEX. Right? They were on 2 exchanges, right? Yeah. So when you look at this, it's like, this is how I see it. It's almost like they don't have a perception around how everything fits together as a project, right? Yeah. Tokenomics is a piece, market making is a piece, right? The marketing, storytelling. They don't understand how it all fits together into one cohesive thing. Yeah. And I see a lot of that in here. And that thing with the percentages, with the value, they often miss that.
Interesting. Well, you said something really interesting before we were walking around. Tony and I spent my entire trip in Dubai so far just walking in malls. And we talk about this at length. And what we were saying in regards to the walking example was that why would walking be rewarded? Like, how are they leveraging walking in a way that creates enough value that on the opposite side of it is a reward? And so I guess if you think about it and if you break down the math like that, like if your business model somehow ties into walking, creating value for you because you're selling the data in some unique way, or you're working with like a shoe brand who's testing out something, then you're creating value to give away a reward. But if you're not doing that, then where's the value being created? Like eventually you're just going to sink. And that was such a clarifying moment for me to just think about a project in such a simple way. Like where's the value sort of points being created where you can reward somebody for doing that action?
Think about this. There's these node sales that take place. Okay, no, you've probably seen this. They sell these nodes, and then the nodes are on the network. They're validators, and they're validating the network, and they're earning their share of the network yield of the token, right? If no one's on the network, why is that token worth anything? When you start thinking about this, right? And as I'm working, Mike and I are both working on a project right now. It has like an earn mechanic to it, and it has sort of like a mining mechanic to it. Yeah. But the only way you can get any kind of reward is if you're creating a valuable data point on the network. And so the way I look at this too, like when you think about tokens and acquisition at its core, it's a cool way, because what if you can use that as an incentive to bring people in to build the very network that might be massive someday. And they're in the very beginning stages. You're like the pioneers of building this and you're owning that. But if most of the supply goes to those individuals, the businesses or whoever that wants to buy the token and use it then has to buy it off of those very individuals. And if they didn't create value, they don't get the tokens.
Interesting. Yeah.
You know, when you start thinking about this, in our space, we try and give value because people will get upset if they're not getting value, if they're not getting like several multiples on their value, right? But we don't.
It needs to come from somewhere.
Yeah. But when you think about this, I used to be a lean manufacturing consultant, right? You have something called a value adding activity. It changes the product being sold, the customer's willing to buy it, right, and pay for it. And it's not due to any defects. Well, if you look at in the same frame, if someone just operating a mining node or a validator node through some node sale they got and no one's on the network, they're earning something that tells them that it's a yield, but it's actually worthless because no one ever wants it. It's all fake, funny money that they just made up the value, right? And so that is a big problem we have to solve.
I think I wrote it down at some point. I remember when I made a bit of money and I was like, hey, I'll try out all these things. I tried out yield nodes, and I don't know if it's still alive, but I put like 2K in it. And then they were setting up noding operators and earning money from that. And then I look at the project after, like, which they're doing. And I'm like, well, how are you going to sell these tokens? Because they were making a lot of tokens in value, and I think that's how they gave you rewards.
That was the farming.
They could never sell it. Like, and then I think at some point when the bear market happened, they were like, well, we got to sell it right now, otherwise we're underwater. And like, the business model kind of failed in that sense.
Yeah, they did a lot of those like farming and yield, like those things when they would just like say, you have to provide liquidity, and then you'll earn the token yield. And then what you do is you pair the token yield with more liquidity, and you keep deepening your position, so you keep compounding, right? Yeah. Mm-hmm. But what ends up happening is over time, it's just like a giant Ponzi that keeps building. And I knew one of my friend, it had like 750 million total value locked. Okay, this thing was just going crazy during the bear market. Everything would not go down until the moment someone decided to sell like $30 million. It's like literally collapsed, right? But it's the same thing.
I got killed on one of those. I think it was like Animal Farm and Drip and like all those.
I made a lot of money in Animal Farm because what I would do is I would study the tokenomics and look at how it worked. And then I would sell right before the next phase of the farm would kick off or something like this. Or one of them was called Moonrise. This was like a meme one where you would buy that, and the trading volume would go into this wallet or contract that when it reached a certain threshold, it would buy back the token. So what I did is I would just watch the contract, and right before it would buy, I would buy my tokens, it would buy in, and I would just sell.
Yeah. One struggle that I guess like New Change would have, or like also with Deepin, right? You have the infrastructure, you got to reward the people that are providing that infrastructure, but there's no one using it yet. So you got to go through a period where you accrue a lot of debt, so to say, and they don't sell hopefully, or you give them another way to not sell. Yeah. But at some point the selling pressure will come aboard. So again, you got to deliver again in that period where you accrue a lot of debt by giving a lot of people rewards, where at some point it got to be flipped where more people want to buy the token rather than more money is actually going into the market.
Games did that a lot with play to earn gaming. Like you'd see as you scale your players, you scale your selling pressure, and a lot of those they did a lot of that. And I just think in general, like if you're going to give someone something and your product is that bad, you got to pay people to use it. It probably sucks. You know what I mean? In many respects.
One thing I say is like try and treat your token as like a loan. Anything you give out is going to come back as selling pressure. And the way not directly, of course, people will hold, but by doing that, you build your business differently with a good mindset, in my opinion.
Yeah, that's a sustainability through, like, again, it's like if you're creating real value on the network, yeah, you get your tokens for that. You should earn something for doing something of value.
Yeah.
You know what I mean? Instead of just like, oh yeah, it's expected I earn rewards or whatever. Like, even my own project, I was joking with Mike and one of our clients, we were sitting down, there was a point in time where I saw someone say, this is amazing, I'm quitting my job. In that moment, I'm like, wait a minute here, something is happening. You know what I mean? Something is definitely, you should not be quitting your job in this thing. You know, I don't know where you live and work, but I don't know how this is, something is off here, right? And this is like, granted, this is 4.5 years ago, right? So it's a different time, and we know a lot more now, but when you start looking back at it, it's like, I just get excited because I think over time we're talking about all this stuff, and this will highlight a lot of the pains of the past, and even people that are open with expressing their failures. Like I like to do that because it's like that's your humility. That's how other people can learn. I think as we keep doing more of this, then we'll grow as an industry, right? If we keep doing this, you know. But if we keep doing the same crap, it's not going to work.
To your point, though, like I think I almost view it as the fake volume of it all. Like I wonder how many users and holders are just like farming your tokens, right? They're farming it and then they're selling it. They're getting a little bit of reward. And we saw it with microbets. Like they would, the second that they could claim their rewards, even if it was $1, they're hitting the market, baby. They're selling
I'm
it.
like, come on, man, another red cell on the chart. God, you're killing me.
And so like really like, but the thing is when you have a lot of users that aren't actually users, the data is less valuable, right? Because it's convoluted with all of these fake metrics. And so the positive is as you move away from that model, I think you get much richer data of who's actually showing up, who's actually using your stuff. And then it gets easier to sell brands. Then it gets easier to sell talent that you might want to onboard because there's actual real numbers that are verifiable behind it.
One of the things that I think is not really measured well enough is like everyone focuses on holders and transferred volume and DEX volume and stuff, but no one's really focused on like how often is like their smart contract they develop actually being used, or how often the token is being used for the specific use case. Yeah. And that's why I like the metric about like ETH gas fees, how much is being used. Well, it's not that much. Yeah. But that's the number you'll probably got to show to an investor of like, you know, we actually have demand, so to say, because volume is not equal to demand.
No, you can go to Token Terminal and you'll look and you'll see some pretty big disparities in volume and utility and stuff. Yeah. And on community though, one thing I thought was pretty cool is, the community that does believe in your project, they want sustainability. And even when you have mistakes, if you have to, like when we had to change our whole economy while the project was live, that's why I'm passionate about tokenomics is once we realized there was something off, we didn't just say, well, that's it. We actually changed, we actually went to the community. We did a whole presentation that explained everything, what we were going to do different, how we were going to do it. In the community, some of them were upset about the rewards, and I said, well, you're selling us anyway, I don't care. And other people were like even more excited for what the project was. They were bringing their friends and their family, and so I look at it as this core where, we're really dealing with people at this time, right? And people get anxiety, and you will have people that will be upset with you, people who will be happy with what you're doing. But at your core, what I found in this space, and it was really cool, is you'll have a group, if you build a good project, you'll have a good group of passionate supporters. And that is magical because then if a FUD or whatever does come up in your chat, you'll find those people will say something, to help defend the project instead of the team doing this, right? Awesome. And that is the biggest thing. So as I looked at it, it was more or less, how do you equip them with ammunition? That way, when you're saying things and maybe you're dispelling something that you don't believe to be true, or maybe it's some FUD thing you're talking about, right? And not going back and banning the person, but coming back respectfully, professionally explaining how it's different, right? Yeah. But as you do that, the community then gets informed, right? And the one thing I used to do a lot is I did a lot of voice chats. That's why I do videos and things today. Yeah. So I would do a voice chat, and I would, like Mike would tell you, I used to be in there and say, if you missed the voice chat today, you missed all the things I used to show you behind the scenes, right? So really what I was trying to do there is build a relationship to get people to show up, because when you're there, then I'm talking to you.
Exactly, yeah.
And I'm building a relationship, right? And that's why Mike and I are friends today, is because I answer the random DM that came through from this guy named Superman that, like his telegram thing, right?
Well, that's crazy.
Yeah, right? I responded back, and now we're here today, like, 4 years later.
Well, one thing that's probably funny that you'll probably, I bet you guys have that when you go to an event, is like people see you every week at least once because you make content. Like they feel like they know you, and they walk up to you and be like, "Hey, Tony," like, and they're like, "I know you," but you're like, "You don't know them." Yet. So I'm saying that's funny.
Yeah, I find it pretty cool because, like I said, I'm introverted, so I'm not one to like go up to a random person. So when no one's coming up to me, I'm just standing there waiting for someone to come to me.
One thing that I actually love to do here is just sit down on a bench and just not put your phone up, just look around. Someone will come sit next to you and be like, hey, a good idea, and have a chit chat. And that's the better thing to do rather than walk around and shake a lot of hands.
That's smart.
Or this, to be fair. I think this is so much nicer than being at a busy event sometimes.
Yeah, I think, I think it's really about networking, because that's how we get into the right people here in these events. That's how you make it the best, is your network leading up. Like, so we're here going to an event after this, so it's like your network, and then people bring you to these different places. They'll introduce you to different people, that kind of stuff.
Yeah, I got a couple interesting trade-off for you guys. I'll throw them at you guys, after each other, but you got to pick straight away, and you're gonna nuance later, but you got to pick.
Sure.
So we'll start with one for you: LinkedIn versus Twitter.
LinkedIn.
DEX versus SEX.
I like Decentralized exchange.
Yeah. Community versus private round.
I like community.
Okay. Solana versus ETH.
Solana.
Utility versus speculation.
I like utility, but I believe it's necessary for speculation.
Okay. Binance versus Bybit.
Binance.
Okay. And then I have the last one is branding versus communication.
They're one and the same to me. Communication, because it's the umbrella that everything falls under.
Interesting. You want to touch upon LinkedIn versus Twitter first?
Yeah. I think that it obviously depends on what kind of project you are. If you're a meme project, then yeah, of course, like go on Twitter, right? That's where your audience is going to be. But I mean, we know, because most of our clients are like really high level, just they're really building the future of Web3, and they're all on Twitter, because that just is where I think a more like authentic experience is. Like, you can really share in a much deeper way, like what you're working on, and find like-minded people. Twitter's great. I just think that like
he means LinkedIn.
Yeah,
sorry,
I was about to say, like, huh? That doesn't
LinkedIn,
sound
I'm
like
sorry,
LinkedIn.
I apologize. Thank you. I'm jet lagged, by the way.
No,
So,
I get it.
like, if I'm slurring and stuff, we landed. I was on a 16-hour flight from LA, so like we're working on it. But it's I think crypto Twitter is like, it's both hilarious and also like a total cesspool, and I'm part of it. But like, I don't think that if you're building something that really wants to communicate in its best form, it's I think that LinkedIn's probably a safer place to be.
Interesting. What would you pick though?
Well, I think like if you're looking to build a professional network, LinkedIn, because when I first started my consulting business and tried to find founders, Twitter, X is Twitter at the time, just brought a lot of scammers and stuff.
Yeah.
I found a lot of trouble with that, and I also really value working with professionals, because I get frustrated if I'm not. Like, people show up on time, they say they're going to do what they say they're going to do. When you're in that kind of market, the meme coins, I mean, that guy could have been off the McDonald's fry line yesterday. They haven't done. I'm not going to criticize that, because I came from nothing, but it's sort of like, you have to build up a level of professionalism, and I like LinkedIn because I could see that professionalism. When it comes to marketing, I think you have to be very dynamic. I think X is where everyone goes to kind of understand sentiment, where things are going. I think you also need to mix that with a good blend of PR in your channels as well, because if you're just through X, then someone searches that, and then there's nothing there, right? So you got to think through like the whole journey of what they're going through, and I think that holistic approach. So the way I think about it, we can go into marketing later, but marketing is to me like a haunted house. When I go in a haunted house, I always come out the exit. So if I'm going to market to somebody, where do I want them to go? And the funnel, the communication is going to be designed to drive them there.
Yeah.
And that's the same way I approach even my own consulting business. Like, I'll joke with my friends, they'll ask me for help with their content, but I'm like, you know what, look at mine. Anything you see of mine directs you to booking a call with me. That's by design. That's how I book the calls, because I'm that intentional in the funnel. And I feel that is the gap. So if you think about where your people are at, whether it's LinkedIn, whatever project you're building, like I hope in the future it's not only about Twitter or X.
Yeah.
Because then it's still the hype, the marketing, like this. It's not real people. Like my dad isn't on X. Like, can he be someone who gets value from a token? Yeah, he should be. If it's real tech, he should be there, right? Should he be interested in buying the latest shitcoin? No, probably not. Yeah. So I look at it from that frame.
You also, just to clarify, so yeah, you can't not be on X, right? Like, that's just like a given. I just think that, like, if you want to really I don't know. I just, for me personally, I like LinkedIn better. But no, of course, if you're any project, like X is where you have to be. I think that honestly though, like TikTok, YouTube, like if you could be on Shorts and Instagram Reels, like that's, if we're going to talk about like marketing channels, like that's where I think, Tony knows I'm a huge proponent of onboarding new liquidity, like the Web 2 to Web 3, by just like getting into the traditional social channels, not pushing a token, but really talking about what you're doing in general, like what's the utility, why people should care. So like I go there more than anything. Like if you could be on TikTok and you could hit like, I mean, the algorithms are so favorable there where like new things can really grow, and it's so much harder to fake than X, which is just like everything is so, again, fake volume, fake conversation,
GMs.
Bots. It's GM. Like, so much of crypto Twitter is truly fake, and that's what I don't like about it. So it makes it just the noise signal is so much higher. So that's why, I would push other channels, like if you could focus your time on it.
Our marketing guy told me I gotta go on Twitter, but like it's a mess. It's
a
GMs
mess.
only. It's
Dude.
like pump the token,
Yeah.
and like I like LinkedIn better because more people sit down and think like, hey, what should I write today that's useful for other people? On X is just like, hey, let me just spam something real quick on news that is already out there, and I'll just copy paste what someone else does. It's not really thoughtful things and new things. But
It's hard to find that.
we did have some, like we got some feedback from like one of our partners, be like, yeah, we didn't get this deal done because we didn't have enough X following. Well, if you go to our LinkedIn, we probably would have had a better chance than the other market makers out there because they're not there. But we just don't have much on X.
Yeah, I wonder. Well, the thing I'm questioning is why I had someone tell me, okay, that you're not on X or whatever, and I said, why do I need to be on that? That's not where I get my business from.
Yeah.
So if I focused all my efforts now from LinkedIn to X, my business would decline. So why is that smarter? So right now, all my business is coming through this one channel. It's working. Why wouldn't I just double down on what's working?
Yeah,
Instead of try and distribute my focus across multiple channels and do shitty jobs across both, right? And this person was telling me this. I'm like, if I literally listened to you, I would be losing money.
It is. I think we need, as a market maker and like other market makers, we need to go above a certain baseline, and then I would say we can go back to LinkedIn. But right now we just don't have much presence.
Yeah,
I want to get at least a couple K followers and be a little bit on top with the other guys thread, so you have some reputation.
You have to. You have to be on there. It's just like,
I mean, you can just buy them, but like that doesn't work.
Everyone else does. To be
buy an
honest.
account. You just buy an account and you rename it. That's how you.
Exactly.
But when I think about that comment, what kind of prompted my attention was, what does the X following have to do with the quality of market making? And when you look at the ones that scam, the ones that even the ones that got hit by the FBI, I'm not going to mention the names, but when they got the FBI, all that, they probably have good followings. Why is that the better way? Like, this is how I question all this stuff.
That's why I think we see a lot of scams, because people go for the big names. And they think the big names means good reputation, but I think the big names often mean maybe a little bit lower reputation. I think the biggest name in the space, to me, at least in the B2B world, I'm happy to call the name after the thing. In the B2B world, I don't think these guys have the best name, but retail thinks they're amazing, and that's why they get a lot of deals done.
Yeah, think about this. Like, if you're a marketing agency, I would like to see my marketing agency have followers on X.
Yeah, because they do a
my
good
market
job.
maker, I don't expect them to be phenomenal at marketing. I expect their zone of genius to be phenomenal at market making. That's what I expect it to be, right? So when I'm judging this, like, I've spent millions across my career, across many different vendors and sourcing throughout all my career, right? And that's the one thing I would look at is the people, like, they might not be the best marketers. That doesn't mean that they're not very good. The company I used to work for, we have $30 million a year in sales. It was one of the worst marketing companies I've ever seen. The sales staff didn't make any content, nothing. They were all relationship sellers. And it was one of the top companies in that industry niche. And if you were to judge it through some lens that doesn't make any sense, then you're not looking at it right. You know?
But they do expect us to have an opinion of like market directions and where market goes, and like on-chain analytics and finding the malicious wallets and stuff, right? So
that could pick you up really good if you guys could hit on those.
I think so. Yeah. And we've been doing like a webinar, the last time. It was actually really fun to do. I think you should do one as well. Or
I saw that on LinkedIn, how you had like 50 people or something show up. I was like, I should do that.
We had 160 people sign up, and I think a show up rate of like consistently 55 people, and some people dropped off and came in. I think the average rate was like 55% showed up at least, which is really good.
Normal webinars are like 25%.
Exactly. So it's really
good.
Good. And I think a lot of listing management stuff were in there as well. So more partners or VCs that just wanted to learn more. But I think that's actually awesome. and I think 30% projects, so to say. So it's actually a great way to like showcase a little bit more your knowledge and the expertise. I'm looking at the time. We'd love to go through the other ones because we also picked DEX versus SEX, and you picked DEX. You want to elaborate on that one?
Yeah, so I like the decentralized exchange because I can see everything and I understand how it works and I understand the mathematics behind it. And I feel like that's the only way I can really understand how to get to a fundamental truth of the liquidity that's out there for a token, to be able to look at that, right? So as I look at the decentralized exchange and I see it has no liquidity on there, I know right away that that is going to be a massive problem for the project, right? So like, for example, as I noted earlier, if there's no liquidity on the centralized exchange, then you have volatility, whether towards the upside or the downside. So your token is all sloppy. And I also believe your price is going to be a function of your weakest link, right? So if you, as a market maker, are now fighting to control this very sloppy, volatile type exchange, you set everything else up for failure, right? You've also literally hamstrung all your marketing efforts, okay? Because again, like I explained the other project, we're marketing like crazy. Big names, really good product, okay? This is a very well-known product, okay? I'm not gonna mention it, but anyway, they only had like, hardly any money in their pool, their liquidity pool. You're talking 25, 35 grand or something like this, and you can't even take in a 10K buy. Think about it. So that right there was literally restricting all of their potential growth. Then guess what? They got listed on Binance, and the thing went over $500 million in like less than a couple days. So it was huge, right? Big pump. And then guess what happened later on? The dump just as much, because again, it's a function of volatility. If there's no liquidity, it's easier to go up faster because you're going to have supply shock, right? And how the mathematics work. And it's just as easy to start crashing back down because now you made everyone a bunch of money. But actually, when you're at 500 million, now you didn't go to like 100 million in the pool. You're still now you're at 5 million or whatever it is, right? Because that's the volume that came in that's in the DEX. And then now that people made all their profit, and someone just sells like 2-3 million, they're dumping you right back down 50%.
You had an interesting video that was around like, is there such thing as too much liquidity? And there is in a way, because people want price movement, but of course not too much. But you definitely don't want to have too little liquidity because then you cannot get an adoption, right? Yeah,
that's another one. Yeah, like I'm a skinny guy, as they could see on the camera. It's like a skinny guy trying to lift a lot of weight. Is how I think about it. That's the example. I was trying to figure out something simple. And it's like, you got a skinny guy, he can't lift the liquidity. That's your, you know what that is? That's your marketing. That's your volume. That is the skinny guy. That's me trying to lift all this. And you restrict all that. The other problem with that too is any tokens you've given out, and this was a mistake I got hit by, because when we were at 200 million, we have 30 million inside the pool, okay, of real liquidity. 60 million total with the token, because it was V2 at the time. Okay, so 30 million BNB, 30, because that was, we were gaming, and that was the chain to be on at the time, with low transaction costs, and 30 million of the token. Now, anyone I gave the tokens to, they have maximum capital efficiency when they're selling. So I've enabled them to exit far more efficiently by building up that liquidity pool. And that's what I realized later on is we were building this up. We built that. Okay, we built that with the fees and everything that came in. We took those tokens. We built those back into the pool. We sold those in the DEX. We paired those back in. We deepened that over time. Instead of selling tokens and taking the money, we put it into the pool. And we didn't realize that as we were going, and again, the project probably would have hit over $1 billion if I didn't do that. Okay, if we didn't do that, because we had literally 30 million inside of this thing in 3 weeks. And that, again, enabled so much selling pressure to happen without dumping the chart down faster, to create a bottom faster, to enable it to go back up, right? It actually, it looks like a slow rug type effect.
One of the things we often talk about, like some of the things market makers are supposed to do is like treasury building. Well, I think it's more marketing that does the treasury building. We just happen to be, passively waiting and people buy from us. But then it's like, what do you do with that? Like let's say you have 100% of the tokens. Like I would say we often say put 50% into your treasury. That's something you can spend. Put another 25% back into the liquidity pool, so you slowly grow it over time. And put another 25% coming as backup liquidity that we can access on the centralized exchanges later. But don't spend 100% on marketing. That's the stupid thing to do. So we kind of make plans on like, what do you do with the treasury that's being built? And you got to be mindful about it and definitely not spend everything, because it will come back on the market at some point.
Really important stuff.
I gave you the question of Solana versus ETH.
Yeah, I mean, I'm sure that like most builders would want to shoot me in the head, but like Solana is just, they're doing it right now, at least, in some ways. Obviously Pump is like destroying the ecosystem and like the draining liquidity from everybody. And then you got, every celebrity token that's also pulling liquidity, but they're like making content, right? You got guys like Jakey who is like a big Soul maxi, and he's like out there like shooting stuff. They were doing that like reality show, right?
Yeah,
like
I was talking to the team doing that.
Yeah, like I just think that like they're creating a lot of conversation about them, and I think that that's the best way to have money, you know, to grow. And I think that you need, like, this is an attention economy. Like attention is gold, as everyone always says. Like it's so hard to get now, and I think that if you have it the way that Soul has, like, you're doing something right. ETH, obviously, like, I am not a developer. I'm not like even that smart, but like I obviously know what they're doing with like sharding. Like, they're creating this amazing technology, and a lot of like amazing builders are on ETH, to my knowledge. But I just think that Soul is right now commanding the conversation. It's like I hope to see them do something really good with it.
Do you know how many Soul fees are at least today in the past 24 hours being paid in terms of on the network in dollars?
I wouldn't even know where to begin.
What would you guess? We had a question on ETH and it was like around like $250,000.
That one I was close. That one I was
I'm
close.
going to go even lower because the transaction
It's so cheap,
cost is so cheap. I'm going to go 75 grand.
Okay.
I'm gonna be crazy. I'm gonna say $1 million.
I think we should look it up because I'm doubting, but I think what I saw is like 1.55 million.
Yeah.
Really?
Yeah,
Wow.
yeah. So
Okay,
that's the
huge.
sheer amount of like transactions that are happening. And if you go on June Analytics and you look at the transaction count per chain over time, you suddenly see Solana getting like a huge amount of traction.
From Pump Fund.
I think that's
what it is.
If you
That's
if you look at the
Yeah.
amount of tokens created on the network,
Yeah,
it's
it's
insane after
Yeah,
Pump
it's all,
Fund. You know,
it's all Pump Fund.
crazy.
Yeah, and that's the thing, like I mentioned, like BSC, like this is 4 years ago. If you wanted a gaming project, you're either on Polygon, which had hardly any liquidity, still doesn't have any liquidity today, or you're on BSC, because that was Binance, and you had BNB, and they had a ton of liquidity on there. And that was the only network you could be on with volume liquidity with lower transaction fees.
Yeah.
Yeah.
And I think that is what breeds a lot of the scams, because people who are good investors will typically, like, if you look at the ETH transaction fees back in the day, to go in and out of a token, you had to make a decision in the transaction fee.
Yeah.
When that is removed, now you can launch a contract for hardly anything. You can do all this stuff, and you enable all the scammers to come in because they're not really the best investors, and they can easily go in and out and sell in and out. So you also enable a lot of this pumping, type thing with the low fees.
The
and
reason I thought it'd be
market
higher
sentiment.
though is because, at least for me, like anytime you're buying anything, like you're trying to beat the MEV bots and shit. So like
that's a
you're
big
bribing
issue.
like crazy, and so I've paid like $20 before on gas on Sol just to try to like get ahead of other people, so I don't get like dumped on when I'm up like 10x because it's gone in a second. So that's
Jared
the
from
only
Subway.
place.
Yeah.
I could be a degen, as you can imagine.
Jared from Subway, I got to call that out. That's a good one.
What is that
You
one?
ever see Jared from Subway?
No.
He's a sandwich attack master. Jared from Subway.eth. He has a master of this. He is the best. I don't even know who this dude is, but his bots, it's like the moment you launch a token, he's on there. If there's an opportunity to do the sandwich attack.
It's very annoying because we were running ARPs between the DEX and the SACs, and they came in between us, and we had to lower our order size because below a certain order size they wouldn't become active. But if the order size became above $150, they suddenly become doing MEV stuff. And
depending on the liquidity pool configuration.
yeah, and then we lost like on these transactions like $30 here and there. But if that happens once a day or twice a day over a month, that's $900 that they lose over time, and like you gotta fight that, which is annoying. Looking at the time, one important question was utility versus speculation. I was actually going to say you're going to go for speculation rather than utility, but you chose utility still. So that's a strong one.
I chose utility because if you don't have utility, you will not have the right kind of speculation. So I chose that
That's the
first
base.
because, again, I think about the root causes and this kind of thing and building the right foundation. So I think the utility lets you market your project more effectively. It lets you sell it more effectively to your market. It lets you do the pitch deck where it makes sense. It actually seemingly has that. And then if you have the fundamentals right, then you can get the speculation. But what we found is when you're also, like, there are examples where speculation itself will work well, and those are meme coins, right? And so in those examples, people are not looking for utility, and we're not claiming to have it either, right? You're kind of buying into the casino, if you will, right? And so I feel like when you lead with one thing or the other, you kind of express what kind of project you are, and that determines how you're going to be perceived in the market. Yeah. So for most of my clients, I don't actually have any meme token clients. There's no need to even hire me for that because
Yeah.
not even where I can help. You know what I mean?
I think there's meme token tokenomics people,
Yeah.
or like
There is.
just
Yeah.
they're marketers basically.
Yeah, and they're great at what they do. Though.
Yeah.
You know, we hired that for ours. Yeah, you pay them, and then they come in, they help you set it all up, right? And then they know how the exchanges work and how much you put into liquidity and how the math works. Yeah, definitely. Before I learned all this, yeah, we did have to hire someone to just quickly help dial that, spreadsheet up and work with us on that. Yeah, but I mean, in that case, even in those markets when you're in that kind of a thing, you're dealing with like the underbelly of Web3. And I've been there before, literally where you got to pay everyone off, you got all the black market, you got this list is real, this list is fake, this person bought their coin market cap list, trending list here. Dex Tools, I know the guy that actually used to buy all the slots that were on Dex Tools. So for 30 grand a month, and then he would sell them at a higher price. So if you wanted to be number one on Dex Tools, you pay this guy. Then he makes sure you go in there. All this is like this. Okay, CoinMarketCap, same thing. You want to be number one in CoinMarketCap, you create enough volume, you pay at the time 40 grand. Now it's right around 10 grand. You could be number one CoinMarketCap trending, right? And then there was an 18-hour list, then a 6-hour list. The 6-hour list was the real one. The 18-hour list was the fake one. And you could look at the time and watch it change right over into the fake one. And you could see all different tokens come out there. And you see all the ones in here that are trending. And it's like this shit going here, shit going here, shit going here.
Interesting stuff.
But when you think about this, who owns CoinMarketCap? Binance does.
Yeah.
Right? And then when you start looking at this, it's like, how is that enabled to thrive? And you look at the rest of the ethics of these organizations. And that's something I pay a lot of attention to. I'm not sure where, with utility or speculation, my whole point is like, this is a very weird kind of industry. And if you go pure speculation, you're going to be in kind of the underbelly in meme coins, and you're going to find yourself scammed, and you're going to have different marketing agencies. When you're a utility, that's where you could find the better providers. Like a marketing agency that, like, you're not going to go to a really good marketing agency and then they're going to just work with you, right? If you have like some meme or something with no utility. They can't do their jobs. They have so many leads coming in, they'll just not even work with you.
Yeah, and it's the same with market makers, right? Like you get the shady market makers on board. But the thing is, sometimes I'm trying blaming other market makers, but it's also the projects that sign those deals. So it's also like, who do you blame? It's not particularly the service provider alone. As long as there's demand for a service like that, people will actually create a service. Mm-hmm. So it's also the people that sign the agreements that could be a blame on whenever something goes wrong, so to say. Yeah,
and I've literally seen agreements where it's like this degen thing where it's like not even an agreement existed. It's a Telegram message and someone just did that. And that's
that's crazy.
Like I literally see these. It was like $50,000 for a KOL, you know what I mean? And the guy didn't post or whatever.
I think
he's suing now, right?
I've seen those. Then I've been in there where they said, Tony, go in there and talk to this guy or whatever and see if we can get the money back. And I've tried to help. And that wasn't my own project, but it's like when I was contributing as a team member, I go in there trying to talk to him, and I would dox the guy. I found you now what?
I wish all of these agreements for a lot of these projects were just made public, so the community knows what basically the money is being spent on that is being raised, and what the agreements are out there, and what is actually happening, because there's shitty OTC deals being made, shitty KOL deals, shitty market making deals, and the community is getting rucked on it.
Yeah, I know one marketing agency, I was talking to them, very popular. And they were explaining to me, we take the treasury build across the first 3 months of the project. Now, when I mentioned that, you might even know who I'm talking about. That's how they make their money. Yeah. So they market, and they take a share of the treasury that's being made, right? And that's selling into the market, basically. And then when I was thinking, like, so if you're only thinking about the first 3 months, what happens after that?
Yeah.
I was actually so you don't care as a marketer what happens after that because you don't make any money off of this. How's that?
I got a market making story, which is I'm not going to charge you a retainer fee, but I'm going to take 50% of your treasury building.
Wow.
So. Jeez. And then this also happens just general, right? Like a lower retainer fee, 70-30 splits. I think that's ridiculous. Stay at least within 90-10, and I think even 90-10 is a ridiculous amount, 10% of the treasury building. So this market maker was literally dumping the token price, pocketing 60. I think they were doing 60K liquidation 2 days. Not the first at launch, but like later on. Yeah. Dumping crucial support, and the objective that the market maker gave, or the project gave us, find a healthy balance between price appreciation and treasury building, and they were just dumping it basically. But it's all because they had like a 50-50 split on that deal and no retainer fee. So it's all the incentive. So who do you get mad at? Is it a project that signed a stupid deal? Yeah. Or is it the market maker?
It's like a Charlie Munger. Show me the incentives and I'll show you the outcome.
Exactly. Yeah, that's a good one.
Exactly. That's exactly tokens, rewards. That's exactly what it is. You give out all these free tokens, you're going to find people showing up to get the free tokens.
One thing I often talk with market making is people think that if you have you need to work with a market maker that has the best latency. Well, I don't think latency will give you the best liquidity. Well, it does give you the best liquidity on Bitcoin, but what's going to get you the best liquidity is the right terms, like the right KPIs and the right incentive structures. Because a market maker, so working with this bigger project on a consulting gig, restructuring their 3 loan option model agreements. Well, they don't have any good KPIs on 2% depth. Well, what we saw is that all the depth that they had was within 1.5 to 2% depth. There was almost 0K liquidity. There was like 60K here. There was almost 0 within 1%, 0 within 0.5% depth.
Wow.
So if you put in an agreement or you incentivize them to actually put liquidity closer to the mid price, that's how you get good liquidity. Mm-hmm. And they probably have the best systems out there, so they could do that. But they're not going to do it unless you give them a reason to.
Yeah.
So it's not particularly the systems that will give you good liquidity. It's the terms, agreements, and incentives that will give you good liquidity.
Yeah. Key point is hire great service providers, and that's
exactly.
I can't express it enough. That determines. The sad thing is someone can work their ass off, a whole team for years. Then they get to this is what pisses me off. They get to the point where they're about to launch. Then the marketer scams, or the market maker rugs the whole thing and takes everything, or something happens out of greed that destroys someone's years of sweat and effort and work. That to me is very bad and unethical, and we see it a lot actually in the space. And that's why I call out the Launchpads the way I do, especially because that's the exact example of doing that, where not only do you not give them the money because of the refund policy, you put in nothing in there and you sell all the tokens on them. You know?
Cool. Now I get distracted. I totally forgot what I was going to say. It was in line with this. Oh, it sounds shitty, but like I cannot care about every project we work with. Yeah. And although I wish, like I need, like I trust in every project, like our job is to do the best that we can at market making. So we give them a higher chance of succeeding. I think that's our role as a market maker. Like there can be a meme token project and we think like, hey, they're probably not make it in 20 years. But the least thing we can do is make sure the best job possible on the market making side.
That's true. That's a good point.
But what I do care about is people not getting fucked over. I can really feel it in my body if I talk to someone that has been fucked over with a loan option model agreement, or work with a market maker that just put $10 on the book and then just left it, you know, to die and still pocketing $3K a month. I can sometimes say like, I'm sorry to say this, but you're just getting fucked over here. Yeah. And it's really shitty. And I'm like, that's I think what I care about more. And maybe if all the scams are out of the world, my business model, you know, I'm done with Enflux. I've succeeded, but that's really what I feel like.
The problem is people don't realize until it's too late. I think that's the sad part, right?
Yeah.
Like you realize once you're live, you realize, I mean, even with what we were doing with micropets, it was like the lessons that you're learning are in real time. You're building the plane as it's flying and you're like, shit, like I wish I knew these things back then. I wish I knew that I was working with these types of people at this point. Yeah. And so, yeah, man, it's just like they're expensive lessons to learn, whether it is market making or marketing or tokenomics. But
it's your network in this space. That is number one, because you get good people around you. You can build that, and then you build a trustworthy team. You know, that's the most important thing. Yeah. And I think it's like you're, as a founder that's watching this, the biggest thing you can do is just make sure that you're building that really strong network of people you can trust. And talk to their references, you know, as well.
That's a good one.
And when you do this, then you know you're going to be able to set yourself up for a chance of success. You know, but it only takes like one bad actor to literally kill you. I've seen a poor woman that raised her full private sale round. Okay, now get this: she goes to Launchpad, starts to market, and the marketer stole the whole budget. Jeez. So now you've raised all the money from people. And you've given the marketer the money to market this, and then they've taken all that. Now you don't have anything to market. Now you're done. And think about that. All the build up, all the work you did to raise the money, all your team that's around there. Now I think about the team, how those people would feel that they're part of this.
Around it.
Now you're in like a sinking ship. How does that feel for you as a team member? You lose your whole team, right? Because no one wants to be on a sinking ship if you can go to one that isn't sinking. It's like a lot like you're trapped on this ship and I'm really here. I could go to another company. I'm gone, or another project. I'm out, right? So I think about that impact, and that is so important. So the only thing you can, like, it's building the right network of people you can trust. That's why you're asking about LinkedIn, Twitter. I think like LinkedIn is the best way to build that network. That's what I found. Great people are on X, great thought leaders there. But it really, to me, it's helpful to pull someone up and say, oh, I've seen their career history. I've seen some recommendations of real people that are there. Instead of this guy's got a cartoon profile picture with 100,000 followers, that maybe means good, right? I don't know.
True.
Right?
Cool, guys. I think I want to round it off. There's an event that we got to attend.
Yeah.
Where can people find more about you? You've mentioned LinkedIn a lot, but like, tell me the company, the website URL. Where can people find more about what you do?
So I have two companies, Tokenomics.net, pretty easy to remember, and Convert that Mike and I own together. CONV3RT is how we spell it. .net. Okay, so you can check us out, Convert. And again, we specialize in websites, pitch decks, branding. We're getting into like, Mike did a crazy video for me, like we talked about earlier. We're getting more into those kind of videos.
Yeah.
You know, we're getting more into those because we really want those high-end, high-impact, exciting things we can push out in the market that are evergreen. And that's really what we're focusing on as a company is more high-end customer service will solve the whole problem. Like one client, we just helped them, all their DApp, all their infrastructure. Mike got the whole video production team. So they came to us saying we wanted a site and this and that. We said, all right, you need that and you need these other things because they don't know. So we're focused as a company now on really high-end customer service and building the full solution. And then we find partners to help execute. Like as an example, instead of me marking up the development company, I give them the development company. That's a friend of mine. So he wins business and I win and I get a client that has a great provider for them, you know, and that's the way we kind of think about that. And that's really what we're working on as a company is, you know, anything creative, high impact. That's what we seek to keep building.
Our goal is
into.
by the end of it, you, if you're a founder, you understand your product in a way that, you know, you never have before, right? Like we sit with you and you understand what really connects with people and the best way to position it and really how to cut through the noise and then creating all of the assets that are communication forward. And if it's any communication touch point, we want to help you make sure that it's digestible to a mainstream audience, whether it's Web 2 or Web 3. And sometimes things are going to be really technical and that's okay, but how we work is a funnel effect of starting at the highest level, the 50,000 foot view, and then getting more technical as it goes so people can access as deep as they want to go. So that's what we do. And then on the video side, just bringing Hollywood to Web 3. Like we bring the best quality. You know, I have relationships, like one of our clients, we're going to be doing a video and it's like, we're getting like one of the writers from Borat that wrote with Sasha to do this commercial.
Really good.
Because he's my homie and he like shot everything for studio.com with like Ryan Tedder and like, they don't, the craziest people, Casey Neistat. And so it's like, and he's just like doing like a small video because these are my relationships. And so it's a nice way to bridge the best creatives in the world who are looking for work right now because Hollywood's in a moment of pain with, you know, brands and projects that really need a better way to communicate what they do. So that's what we do at Convert. It's
Love it.
Check us out.
And if people want to learn more about you, like is LinkedIn X?
Yeah, LinkedIn's good. Or storybymike.com if you want to check out if you have a movie, I guess, or a TV show like that, you know, it's probably relevant. But I do also, if you have any questions on like IP, I understand IP better than most people, I would say. So if people are building something that are, you know, could potentially be exploited in different ways, then yeah, I would reach out about IP or really, I mean, honestly, my main focus is just grow and convert. The film, TV stuff is probably so separate from this, but if you have any questions, I'm there.
Awesome, guys. It was very lovely to have you guys. I'm excited to go to the event.
Yeah.
And it was a cool one.
Thanks, brother.
Thanks for having us, man.
Cool.
Awesome.
Let's take a quick pic.
Yes.
For the LinkedIn.
Do you want me to come over there or how long are your arms?
I'll just do it with my arm like this. Cool.
I got to pee and then. Great job, guys.